Recently, Steve Severaid was asked to give a presentation to the Association of Celebrity Personal Assistants on how to best support celebrities and high net worth clients. Steve Severaid is a principal with the Greenspan Co Adjusters International. Steve has been with the company since 1992, and he began his career in the public adjusting field in 1989. He works for disaster victims so that they can get their lives back in order without the added burden of assembling and documenting their insurance claim. Steve works as a team leader to zealously advocate for individuals, communities, and businesses that have suffered major property damage.
But I'm going to keep this, a little bit more broad. And then if there's specific questions, particularly about wildfires, we can get into that too. Celebrity clients, as well as high net worth clients, present some unique challenges, which you folks being assistants for celebrities probably appreciate a lot of those challenges already. Certainly, several of them. I'll give you an example. We had a celebrity client. I don't name any names, but we had a high celebrity client who insisted they had a small fire, large home, but a small fire, didn't affect the whole home. This particular celebrity client and the wife of the celebrity client insisted that all of their personal property throughout the entire home be thrown away and that the insurance company pay them for it all. And that's really not the way insurance companies respond. They have a system in place where they will go through the home and have a company pack up and take out and store things that are not damaged but need to be moved out in order to facilitate fixing the place up. But celebrities are funny sometimes, and they don't see it that way. They're just like, no, there was a fire in my home and I don't want any of this stuff, and my stuff's very expensive and I never want to see it again, and I want you to take it. I don't care what you do with it, throw it away, keep it, do whatever, but we don't want it, and we just want to be paid, and we want to be paid every dollar that stuff cost us so we can go buy new stuff. And that for most people is unreasonable, but for some of these unique clients, not just celebrities, but real high net worth, high value clients, they often want things above and beyond what normal sort of everyday folks would think is reasonable. That's not always reasonable for them. So when you're dealing with those kinds of challenges and making people happy at that level, we have to get really creative. It takes an extra effort and energy with the insurance companies and their experts to try to corral them into paying something that they don't normally pay. So it becomes an extended effort to please people at a certain level to where they feel like they've been heard and that they're getting what they believe that they should be getting, even if it's not a standard in the insurance industry. And we're pretty good at knowing about that and understanding it and working with folks like that. Often, not always, but often these clients are the most important person in the room. And the insurance companies just don't really respond that way to clients, even if they're high net worth or well-known or celebrity clients. Insurance companies just don't respond the way that these types of clients would expect and think that they would. And they still have a process they have to go through. It's still time consuming and still arduous at best. And so that also presents some difficulties in these kinds of claims. And when we're talking about the buildings of both celebrity and high net worth individuals, oftentimes the building components that are used in building these homes are of significantly higher quality or significantly higher skilled craftsmen who are doing the kinds of fit and finish that somebody with really high demands wants, needs, desires, and is entitled to have. And insurance policies use a software called Xactimate that it's a computer software that in no way in the world can ever recreate what many of our clients, the quality and the customization of our clients and what they had. The software just simply cannot compute at that level. And then there's another component to that also that makes it even more difficult, and that a lot of these types of clients also use a type of contractor, building contractor, that's used to working at this level, and therefore they charge exorbitantly higher amounts of money to do things on these projects than most people, even people with some wealth, would ever pay. And we've got a couple of contractors here in the city in San Francisco, and Gwen probably knows some of the names like Platt. I don't know if you know Platt. Yeah, we finished a project just a few years ago, a flood in a very high net worth client in Presidio Terrace. I don't know if you know Presidio Terrace, Gwen. And they did a $3 million kitchen remodel on their house. It was a kitchen remodel they spent $3 million on with Platt. There's no world of insurance. There's no handbook anywhere that could possibly explain to an insurance company how a kitchen remodel should cost It's a nice kitchen, don't get me wrong. It was in a magazine, but it's still $3 million for a kitchen remodel. I think all of us on this group here can identify that seems like a lot of money for a kitchen, right? For them, that's the cost of what they do and how they live, and the type of contractor that they would use who understands the confidentiality, understands the kind of tradesmen they have to bring into that environment, especially if people are living in the home while work is being done. So it's a whole nother level that becomes a burden of proof to the insurance company of why they should be paying at such an exorbitant level. And the people who own these kinds of homes, they don't really care. They just want it done right, and they want it done the way they expect it to be done, as I'm sure all of you know. So that presents some challenges with building claims. With contents claims, when people lose things in their home that are damaged, especially with the kind of clients that we're talking about, you've got high-end personal property. And where we have problems in the adjusting world with high-end personal property is insurance company adjusters who come out and are tasked with inspecting and going through and making reports to their insurance company and their supervisor. They make somewhere typically between $60,000 a year and really experienced maybe $150,000 a year. That's if you've got an A-level adjuster, but these are not people that are raking in millions of dollars. They don't live in that world where they would have a $50,000 or $80,000 Persian carpet, for example. They don't live in a world where custom-made suits cost $12,000. It's just not. It's not part of what their world is and what they're used to. So oftentimes it's really hard, even though it's very provable what things cost. It's really hard for these insurance company processors to swallow that pill and understand why they should pay such an extreme amount of money for personal property. So it requires another level of documentation and proof and climbing the ladder of the insurance companies to get them on board and doing really detailed inventories that really include every item about the item. In other words, if it's Ralph Lauren, it's not just Ralph Lauren, but it's the purple label. You know, you've really got to identify so that you have as much detail, because the dollars are in the detail when it comes to compensating your owners, people who you report to make sure that they're getting back the value that they have lost. And so the other thing that comes into play is time management. When there's an insurance claim, it's not like a drive-through auto claim where you drive in one side and you drive out the other and you have your estimate and you go fix your car. This is a complicated process. The more damage you have, the more complicated it becomes, but the process itself is a process. It's an arduous process. It's a lot of back and forth, and insurance companies demand a lot of the insured or the policyholder's time in that process. And time, these are busy people with a lot of demands on their time. And one of the things that we bring to help with our clients and to help folks like you who are tasked with the responsibility of managing these things is that we can take a lot of that burden of time off of your hands as well as your clients' hands. And as licensed registered advocates, we're there at every meeting. We're there with our teams of people putting it together. This really relieves your clients as well as you guys from the daily grind of this experience that, if you've ever been through it or touched it or tasted it, you know, can really be like a whole nother job. And while you still have a job to do and your clients still have jobs that they have to do, this becomes another full-time occupation that none of you really want or want to learn or need, and hopefully would never need a second time. So this learning experience is just that. It's not something you're going to be able to apply over and over and become skilled at. So a little bit more about us and how we help. We are pure advocates. We have a parallel interest to you and to your client at all times. We don't sell insurance, so we have nothing to gain with loss ratio contingencies where based on the profitability of the business, it affects our bonus. So we don't have that. We don't have that going on. We don't ever sell insurance at all. We do not build any buildings, so we have no competing interests to try to get a contract or be part of the solution for the rebuild. So our focus is very narrow. When you have a fire, or if you have a hurricane or earthquake or some such similar event, you've got really two areas of recovery going on. The first area of recovery is you have an insurance policy, and there's certain parameters in that insurance contract, and you want to make sure that you get every dollar you're legitimately entitled to under the terms and conditions of that insurance contract. Nothing more, but certainly nothing less. And so that is just a theoretical challenge as to what it would have taken in a theoretical world to put back exactly what you had, not necessarily what you might want. And so that is the world that Mark and I and Rob and our group live in every day. And that is getting the money, okay? Spending the money is the second track of recovery, deciding if you want to spend the money, how you want to spend the money, if you want to do something differently. All these ideas and concepts, the insurance company loves to get in your business and be part of the second track of recovery of the spending the money. That's not in your best interest. It's not in your client's best interest. So for us, we don't have any interest in how you spend the money or how your client spends the money. Our focus is to make sure that you know all your options and all your opportunities of how you can spend that money, and to get you that ball of money so that you can make good business decisions or family decisions with the money. And so again, we have a very parallel interest to you and to your clients, and in regards to only wanting the very best for you guys. So we have an incentive to get the maximum amount of money, and we also have an incentive to get it in the shortest amount of time, right? Because we don't get paid until our clients get paid. So we have no incentive to drag this along, like many insurance company contractors and consultants who work on an hourly basis, who this is just like a slot machine kind of thing. They just keep going and going and have more meetings and have more meetings. And you can see that these things will just drag out, and there's no incentive to come to a resolution, because then that turns the spigot off of their billing. Also, all of our experts are under our roof. So we have under our roof, we have insurance experts, ex-adjusters who used to work for insurance companies that have hopped the fence. They want to wear a white hat instead of a black hat now. And so we have teams of those kinds of people. We have a whole inventory department with inventory specialists who do on-site inventories, those detailed analysis I talked to you a little bit earlier about. We have people that then put it all into the right formatting. Then we have people who literally do nothing but price things all day. All they do is price things. And it's not what you remember paying for something, or even what was on that American Express statement from 3 years ago. It's what will it cost to buy this item new today, no deals, no discounts. And what's it cost to get it back into our clients' hands? And so there's a whole department that does that, and a whole department that analyzes how much depreciation we should allow the insurance company withhold, because it's a two-tiered payment without getting too detailed tonight. Most policies pay you for the used value, or what Mark and I would call the actual cash value of an item, until you replace it, and they hold back what's called the replacement cost hold back till you replace it, which is a complete burden. And they do it on purpose because they save millions and millions of dollars of people who don't save the receipts and go out and don't go rebuy everything. And most people never rebuy everything that was lost. And so the insurance companies are able to save a lot of money by only paying that used value. So part of our function is demonstrating to the insurance company that that amount they can hold back is very, very little, because of the type of quality or the amount of use that something gets. If you have 3 homes, you're not going to use any of the things in your 3 homes nearly as much as somebody has 1 home, for example. So that means that stuff should last longer. Just as one of many, a myriad of examples. So having those experts, those inventory people under our roof, really, really important. We also have our own structural teams, structural evaluations. Remember, we don't build anything, but we know how to build the theoretical estimate in the insurance company's language, because it's the only way that sells it. Getting the high-end custom builder to turn in an 8-page estimate for $4 million doesn't settle the claim. Even if it's exactly the right amount of money, you have to speak the insurance company's language in order to win these battles. So on our team, we have in-house those people who are ex-building contractors, who we trained our way, we've trained with our software, who are constantly getting retrained on the latest things, constantly looking at new pricing. Lumber's up 300% right now, constantly paying attention to those material and labor increases, building it into the format the insurance company needs to see in order to pay the claim. So we have those people under our roof. We also have attorneys under our roof. And I mentioned that we don't practice law, but we get a lot of benefit out of having attorneys for pulling case law to demonstrate how other decisions have been made in courts, and interpreting policy language and all these kinds of things. And we have forensic accountants on our team as well, which for residential is not always a thing, but we get into residential with a winery attached to it or a commercial property. We have a whole team of forensic accountants that go through and find lost profit, continuing expenses, extra expenses, and define all those things. And all these people, again, are under our roof, which helps us with confidentiality. It helps us with control, and it helps us to have a cohesive unit that can get this done effectively, and we can control when they get out, as opposed to calling some outside expert, waiting for them, or waiting in line to get an expert, especially in a wildfire situation where experts are very hard to get. We have the benefit and the ability and keep all these people on staff at all times so that we're ready to ramp up when things get incredibly busy. We talk about money, we talk about getting money, and we talk about making sure nothing's missed and the quality is right, all these kinds of things. But oftentimes, our clients don't know what they could do or couldn't do, what changes in their lifestyle are happening when an event happens. Nobody plans for their home to burn down, for example. But the timing when these things happen, sometimes the client was just about to sell their home anyway, or they're about to buy another home, or they were looking to add another home to their portfolio, or they were going to remodel, or all kinds of what if real life scenarios that were happening, and then say their house burns down. The bouncing ball approach that the insurance industry uses is, okay, we agree on how much it's going to cost to fix your home or rebuild your home, and then you go and you hire a contractor and you rebuild your home, and they'd like to audit all that, which of course we eliminate that part of it. But that's the standard practice, and they hold back money just as they do on the contents. They'll hold back some money until the client policyholder demonstrates that they're actually fixing the house. And then when they've demonstrated that they are either committed to doing it or they have done it, and that varies a little bit in the negotiation, then they pay out the holdback money. Well, there are other things that you can do. You can buy another house somewhere else. You don't have to rebuild there. You can take the money and run. And there are some scenarios where that makes sense. In complicated claims, it's not unusual for us to do a global settlement, a global compromise settlement, something between that used value on all the components of the claim and that replacement value on all the components of the claim, bundle them all together, apply a little discount, do a little negotiation, and do a walk away and get the insurance company out of their lives so that they don't have the insurance company still in their lives. And that appeals to a lot of people. We just finished a very high net worth claim in Oahu where we did a global walk away. And this guy was not a celebrity, but it was a very big real estate guy. And you may have actually heard, it was the beginning of 2020. And you may have heard on the news where this crazy person started shooting and shot the landlord, had a shootout with police as a police officer got shot. And this guy happened to live right next door to that experience. And he wanted nothing to do with living and set fire to the house. The house got his house on fire, and he wanted nothing to do with living there anymore. And he just wanted to go away and didn't want to be in Hawaii after that traumatic experience. And we were able to put a global settlement together for him. So the point is, you never know what the situation is when something bad happens to you or to your clients, and to know all the creative solutions and be able to sort of brainstorm. And that goes for temporary living quarters too. Do you want to rent another place? Do you want to stay in one of your other homes, and how do you get compensated for that? Do you want to live less than on purpose and get some value for that? Do you want to go, and we have a client right now as a result of the wildfires who's living on an estate in Puerto Vallarta. They said, Steve, I don't really want to be around here. We're going to rebuild at some point. We're not in a hurry. We've got money, but I don't really want to be around my town up in the wine country, thinking about all this going on, watching the demo be done, watching the clearing of the trees, dealing with construction. We're just going to get away. And so we were able to put a claim together with the insurance company, got them to agree to a villa in Puerto Vallarta. And so they're going to live there for 3 years while they decide what they want to do. So there's all kinds of strategy and opportunity that can be employed. And one of the benefits of having a team like ours is having a sounding board to be able to say, could we do this? And if we could, how would we do it? Like, have you run into this before? And how was it? Was it met with resistance? Did you find a way to make it happen? And we may say, hey, that's a great idea. We could do exactly that. Or have you considered this, which might be even better than what you were thinking? Because we've sat in the chair so many times. So we've been around the block so many times doing this that there's very few situations where you're going to come to us and we're going to say, gee, we're scratching our head because we've never heard of that before. And so that gives you, and it gives your the folks you report to a great ability and sounding board. Because otherwise, what are you going to do? Go to the insurance company and ask them these questions? You're going to get an answer. It might not be the best answer, the only answer, but it's an answer. So I think one of the unique value propositions that we bring to these kind of situations is exactly that, having that years and years of experience and been there, done it. And from an advocacy perspective, we earn our keep so many times over. Our ROI is, it's so good that I don't even really like to talk about it because it sounds self-serving, but we always earn our money and much, much more. Most of the time, I'd say 90% of the time, we work on a contingency fee. We're paid as and when our clients are paid. We get nothing up front. All of our costs and expenses are on our own. They're not passed on to our clients. And the fee really depends on a few factors: the quality of the insurance policy, the timing of our involvement. The earlier we get involved, the more ability we have to manipulate the claim and shape it and make sure the outcome's better, and the faster we can get a resolution. And then obviously the size of the claim, there is a little bit of an economy to scale depending on the size and volume of the claim. But I'll tell you that sort of an industry standard of public adjusting fees is in the area of 10%. So sometimes it's a little less, sometimes it's a little more. And the concept here is that there's a real return on investment here. By the time we get done applying and doing what we do, that fee, whatever it might be, is made up many times over. So it's not a matter of changing an insurance company by 10%, but it's many times that X factor. We generally only handle claims that are in excess of $250,000 in damage, or obviously a lot more than that. There are times when we will consult and help on a pro bono basis on claims smaller than that. There are times and situations where we'll come in and help with claims that are smaller just based on circumstance. But generally speaking, our appetite is claims that are $250,000 and beyond. And for probably any of your clients, that's a almost nothing claim because it just adds up so fast. But if there's a little thing in the garage or something, it's not typically something we get involved in. Also, as I mentioned before, we only work on first party property claims. So if there was an auto accident, if it was a liability, if somebody came onto somebody's property and got hurt, if you, for some reason, insurance lapsed and you didn't have insurance, but somebody else was at fault, we're not licensed to be able to handle that claim because it's called a third party claim. So those are claims where we wouldn't be able to get involved or handle it. I'm happy to report that we were able to negotiate that similar to how we would negotiate a retail store. So in a retail store, if you have a little fire in the back storeroom and there's just any hint that there could be smoke throughout the retail store, even not necessarily visible smoke, but if it was exposed, which was their point, hey, all this was exposed, even though we can't wipe any soot off it, it was exposed. That was the client's argument. And we were able to negotiate that claim as if it was a retail store. And we're able to do that because of the quality of the items that they had and the new age of almost everything that these particular clients had. And we were able to say, hey, this is not an average home or an average homeowner. This is more, can identify more with a commercial interest because of the quality, the amount, and the young age of all the items and the sensitivity that some of the family members have towards, what do you call it, Mark? Sinuses or allergies. Thank you.
Yeah, allergies. Yeah.
Allergies. Yeah. And so what we did, like we would do in a retail store environment, we brought out a salvage company. And normally, although they have the right to take salvage in a house, almost they never do because it's just not worth the time because they don't get enough money out of it. But in this particular case, we brought in a salvage company. A salvage company comes in, they load everything up, and instead of packing it and storing it and giving it back when everything's done and cleaning it up, they take it and they sell it on a secondary market for pennies on the dollar. But it was a way for the insurance company to recover some of the money that they paid the client, but at the same time pay the client out and stop it from becoming a bigger issue or a legal issue. So that was how that's not an every time win, but in this particular case, that was how we're able to solve the problem. You know, what's a nice idea if you've got the storage space somewhere off site is to take material samples. So if you've got a really unique tile that's been imported from Italy, mosaic or whatever, take just a couple pieces and then build a sort of a treasure box of little chips and pieces of materials. And again, store it off site because you can start on site and it burns down. It's not really going to be of any value to you. But that's a great way to demonstrate the type of material and the quality of the materials. Obviously, keeping a book of invoices and payments and everything is great. Although that doesn't necessarily mean it's good for a claim for pricing. It is good for a claim for seeing types of value and stuff because we can't count on pricing being the same from the time you're doing a building project now to say a year or 10 years from now, but the quality of the items still be there. And also something that I'm going to talk about is videos. Videos are really helpful. I'll get into that in a minute, but those are some of the things you can be doing just just keeping a notebook of all the invoices, all the stuff, and keeping a sample book and keeping all that stuff off site. So for our work and what we do at Greenspan, our work starts after an event happens. And the best time to bring us in is really right from the beginning. Like the first phone call should be to us so that we can start lining up everybody and being an advocate, being the mouthpiece from the very start. It's kind of like setting the stage for the play. And if we're involved in the beginning, we can help pick experts from the other side. We can be very involved. We can, there are things that really smart people do in the beginning of a claims process because they don't know the process that hurt them and that they can't put back. It's like putting toothpaste back in a tube. So really an event happens, you want to get us on the phone, contact us right away, have us come out and inspect, have us look at it. And literally from the first conversation with the insurance carriers till the end, we become the mouthpiece of the insurance claim. So from the standpoint of, it doesn't mean we don't get involved in claims later, but that's when people fare the best and we have the most control over the outcome and are able to manipulate the situation from the start. We do get in claims later. We do get calls from people later who are frustrated. Some of those people were able to help. Some of those people were not. But the very best time is, it's like getting insurance on the insurance. Just have your team out there and have them advocating for you and for your clients right away. Having said that, we also do a lot of consulting work, pre-loss consulting work. It's not something that we typically charge for unless it's a really complicated portfolio, but we're always available, especially to groups like yours, of working and taking another look, talking to the broker. And again, we look at things through a different lens than the insurance broker looks at it. They place coverage, they sell coverage. They don't always have the benefit of seeing how those coverages, as I think Mark pointed out when he was a broker, seeing what does this really mean and what does it really do and how does it act in the real world of claims? They're on the sales side. They're not on the adjusting side. And obviously they believe in the product they sell, but we have a different lens. So we'll often talk directly with brokers about suggestions and things they could do differently. We'll review insurance policies. Sometimes we'll even go out and do walkthroughs and inspections. And for that, that's not a profit center for us, but it's something that we do to just be responsible people and help in a proactive way, so that if there is an event, I mean, it's a little self-serving, right? Because if there is an event, we want to make sure that everything's dialed in perfectly so we can get the maximum amount of money and get the best benefit of the coverage. So we do that. It's a normal thing that we do. It's not our profit center. It's not how we make our income, but we're happy to do it, and we do it often. Definitely review your coverages. Meet with your broker. Make them earn that commission. Get them out and do another visual inspection. Things change often. We say, just like you check the batteries of your smoke detectors, you should be checking your insurance policy requirements too. Make it a regular checkup, and be looking at what real rebuilding costs are today, because they have escalated greatly. If you have a home that's an older home, make sure you're looking at how much building ordinance or law or code coverage is attached to the policy. So insurance policies, and people get really wound up with this idea, well, I have a replacement cost policy, so I'm great. That is a false sense of security. The replacement cost policy has so many limitations, and they're all they're mostly replacement cost policies with some wildfire exceptions. They're mostly replacement cost policies anyway, but replacement cost still has a limit, and it still has things that are not included. And the standard replacement cost policy doesn't provide any coverage for what you have to do differently in building it today than when the house was originally built. Some policies have 10% coverage for building, but only 10%. Sometimes that's included in the building limit, sometimes it's not. Sometimes there's more coverage. So if you have a property that's an older home that you recognize that if you were going to have to go and rebuild that home or fix that home after something happened, that you'd have to put sprinklers in, widen the stairways or walkways, or put higher guardrails in, or there's a ton of different things that can be done that will need to be done or required to be done by a city or county on an older home that didn't need to be done. And those changes can often be hundreds and hundreds of thousands of dollars beyond what the normal rebuild or theoretical rebuild cost would have been of that house. And so if you have a home in your portfolios that fits that, there's a bell ringing there. The first question to ask the broker is, how much coverage do we have for building codes? And really do some homework to find out if that is a fair reflection on what the real number would be, because we have a lot of circumstances where that number is deficient. So that's the first thing, especially on older homes. Get a brand new home, you're not going to have that much difference in codes, but as homes get older, these codes are constantly changing. The second thing is your fine art and jewelry. If you have a fire, your fine art and your jewelry is included in your contents limit. If you have a theft, it's not. Then you've got sub-limits to deal with. But even if it's a fire and it's included in the limit, if you've got a lot of high value art and high value jewelry, it erodes the ability to claim for all the clothing, for all the couches and all the other stuff in the house. So make sure that you're comfortable with how much coverage you're putting on for you or for your client on fine arts and jewelry. And obviously scheduled jewelry and scheduled fine arts gets paid out a lot easier because, and there are two types of floaters. One type says this is an agreed value, one type doesn't. But if you have the agreed value type, there's no argument on those items. They just simply say it's gone, it was there, now it's gone, and we've insured that item for $102,000. Here's your $102,000. That eliminates some of the back and forth on the claim. Of course, you're paying extra for those coverages, but that's a decision that you guys and your client should be making ahead of time, not after an event happens going, well, gee, you mean we could have insured it this way and we'd be covered differently? Now's the time to make the, and if you make a risk management assessment and you decide that you don't want to pay the extra premium for those things, at least you're going into it with your eyes wide open. You know what your risks are, and you know how that changes the complexion if there's a major claim. But that, again, is a decision you want to be in control of making. And the only time you're in control of making that decision is before something bad happens. So another thing, additional living expenses. That's loss of use. And sometimes insurance companies will say, well, you have another home, so you can live in the other home, and which is total poppycock. We deal with this all the time. Even if you have another home you can live in, it doesn't mean you're not entitled to the loss of use of the home that was lost. And so even if your client may say, well, I'm not that worried about that because I could always shift and go over here. That seems like a plan until you lose everything. And then things change. And we've seen this where people think differently when they realize they're going to be out of their home for 2 years or 3 years. And now suddenly that, well, we can always stay at this other location. It's not a temporary fix. This can be a 1 year, 2 year, 3 year problem, depending on the size of the event. So especially with wildfires, there's been a lot of legislation enacted recently in California for wildfires. If a fire comes through as a part of a declared wildfire, then your additional living expense can go, instead of only being 24 months, can get extended all the way up to 36 months with good cause. However, there's a caveat. We found with some high value clients that they have this loss of use coverage, which is a standard coverage. They have the loss of use coverage, but they're limited to a dollar amount. And when you talk about high value clients, and you're talking about, if especially impacted in a wildfire or brush area, those expensive homes that weren't destroyed, those rent prices skyrocket. And so all of a sudden they're paying $50 or $60 or $80,000 a month for a temporary rental property. And if they're limited by a dollar limit, they can run out of money very fast. And even though the Department of Insurance has said in a wildfire situation, hey, you have 24 months coverage, but now we're going to give you up to 36 months. Well, if you run out of the dollar limit before that, in 12 months or 20 months or 24 months, then you've eroded your limit and you don't get the benefit of that legislation. So there are two types of loss of use or additional living expense ways to cover. One is called actual loss sustained. And that means there's no dollar limit. It's only limited by the 24 months in the policy, or in a wildfire can be extended up to 36 months. So that means even if you thought it only cost $30,000 for a temporary replacement, it now costs $80,000, you can prove that that's what the marketplace is. They owe it, regardless of how much it ends up costing, all the way up to potentially 36 months. So if you've got the kind of coverage that gives you actual loss sustained, not something you have to worry about. If you have the kind of coverage that has a dollar limit, this is something to think about and consider. And again, do a risk management evaluation of what you think it would cost for you or for your clients to be out of the home for extended amount of time. What does a satisfactory rental look like, or another location look like, and how long would that last? So I can tell you that we've seen in these wildfires people that were badly affected by that problem. And then of course you want to do your earthquake risk assessment too. And earthquake insurance after the LA earthquake was basically non-existent, almost kind of like what we're seeing with wildfire area insurance now. It did get better. It's gotten better and better. It started bad. It's gotten better and better. So it is a separate coverage. It's not included under your homeowners, as is flood not included in your homeowners. So you want to do some risk assessment on that. You want to talk to your broker about what those additional premiums would cost and how much you want your clients to risk of their own wealth versus how much do you want to push off to an insurance company. And so that's sort of what you'd be doing now. And I think I already mentioned, definitely the best thing you can do right now is go through the property and videotape the whole interior of the home, pull out drawers, go in closets. It doesn't have to be a long video. And you can sort of be descriptive as you go. I know they purchased this when they were in Italy 2 years ago, sort of do a little narrative as best you can, go through the whole house. And then really importantly, make sure you're saving that video somewhere off-site, whether it's to the cloud, whether it's a hard drive that exists somewhere else. Because again, if the house burns down and you have this great video and it gets burned down in the house, then it's of no value to it. So again, we're happy to consult with your broker on these things. Remember that claims is the biggest driver of profit for an insurance company. It's the single biggest thing that they can change to change their profitability. So they really scrutinize claims. And your broker has little or no control over claim situations. The reason they separate the sales side of the business from the claims side of the business. And if something happens, again, bring us in early. It's not written in any insurance policy that they have to do that. There's no language in the policy. There's no court decisions that force them to do it. We do it all the time. It's not an unusual practice for us. It's generally only on large, complicated claims. It's not the everyday homeowner kind of situation. So the more complex, the more balls in the air and things that we're negotiating over, the easier it is. And the concept here is to develop the very largest scale potential, theoretical potential of what a long-term building project could look like, with all kinds of specialty supervision and all these what-if scenarios built into the cake. Content, same thing, loss of use, put all this stuff together. We do it more for commercial properties than we do for residential. As I pointed out, we just finished one in Hawaii on a residential property. And before you get to discussing the global settlement, the strategy is to get all this stuff and be asking for the world. And in true insurance negotiation fashion, the insurance company is coming up with their own assessment with much lower numbers. So you have a very big bridge to gap. And then sort of towards the final hour, say, hey, let's talk about maybe doing a global walkaway on this thing. And you can't start there. If you start in the beginning saying, hey, we want to walk away and do a global, then they won't do it. They have to really believe you're going to do the project in order to get a good global walkaway settlement. So there's some strategy as to how and when you do the global walkaway, but as I say, we do it quite often.